Okay, I think it's out of the timing. Yep, it is morning time. Let's wait. And here you go. Target smashed. So we made right now 2 hour. Let just wait. And here we go, guys. So we made once again 2 hour. Hey everybody, so today in this video I am going to show you a simple day trading strategy. In this you do not need any kind of structure knowledge or liquidity knowledge or any kind of supply demand knowledge. All you need is simple mechanical strategy which you can use day in and day out and make money. And it is 100% mechanical, so you don't need to add in any kind of discretion in this, and it is very simple. Many people struggle with liquidity and multiple time frame analysis and structure and all of that crap, so that's why I made this strategy very mechanical and simple. Any beginner can use, anyone can use this strategy, no trading experience required, and you will literally get funded with this strategy, and I think that's all you need. So if you are new to my channel, let me introduce myself. My name is Harsh and I am a full-time trader since last 5+ years, so you can trust me whatever I am going to show you. Also you can backtest the strategy and forward test the strategy and collect the data, and you can see the accuracy of that. So let's start the video. So the strategy is very simple. It is based on fair value gap. Now if you do not know what is fair value gap, fair value gap means imbalance. So market moves in a two-way. One is balance state, in which market is balanced, and second is imbalance state, in which market moves in which market expands fast. Okay, so the fair value gap is simply the gap between number 1 and number 3 candle. So when you see the gap between the 1 and 3 candle, it is fair value gap. So most of you already know what is fair value gap, but some people don't know, so I am explaining. When you have gap between 1 and 3 candle, we call it fair value gap. Candle number 1, candle number 2, candle number 3. So here you can see we have the gap. We call it imbalance, we call it fair value gap, FVG. Same thing, just different names. Okay, so the strategy is simply, we are going to use two time frames. Time frame number 1 4 hour, time frame number 2 15 minute. So what is the strategy? Let me explain in the theory first. So we will wait for the fair value gap in the 4-hour time frame, and when price come to our fair value gap, we will drop down to the 15-minute time frame for our execution, and we will wait for fair value gap again in 15 minutes. So let me repeat, we will wait for the 4-hour fair value gap, price will come to our fair value gap, then we will drop to the 15-minute time frame, and then we will wait for aggressively fair value gap again in 15 minutes. Then we will set our entry on that 15-minute FVG, and we will target simply 1:2. Okay, so that's it. This is the simple strategy. So let me explain one more time, then I will show you the examples on the chart, so you will get the complete clarity about this strategy. So step number 1, mark your fair value gap in the 4-hour chart. So for example, this is our 4-hour chart, this is our fair value gap. Alright, we marked our FVG, then price came to our FVG, aka fair value gap imbalance, then we drop down to the lower time frame 15 minute, and then we will wait for again fair value gap, and then we will set our limit entry, target 1:2, and boom, good to go. Alright guys, so I hope the theory is now get cleared. Now let me show you some examples on the chart, so you will get the complete clarity, and then you will thank me later. Okay, so let me show you some examples. So guys, here we have our example number 1. We have SPX 500 4-hour time frame chart. what we have is our fair value gap. Candle number 1, candle number 2, candle number 3. Simply mark your fair value gap. All right, 1 second. So this is our fair value gap. Let me highlight it. Okay, so now price tapped into our 4-hour fair value gap. Guys, do not get panic when price did wick like this, and you will assume, oh my god, my fair value gap is getting filled. No, wicks are gap, they are not real. So until price is not giving body closing into your FVG, it is valid and you can use that. Then drop down to the 15-minute time frame, and boom, this is our 4-hour fair value gap. Now watch it carefully. We have another fair value gap in the 4-hour fair value gap. We have another fair value gap in the 15-minute time frame. Alright, let me remove these indicators so you don't get confused. Okay, so the yellow one is our 4-hour fair value gap. Okay, and then we drop down to the 15-minute time frame. Then we have another fair value gap. Now all you need is simply set your entry in that fair value gap. Stop not above swing low, just above the candle. Alright, target as I told you 1:2. Now let's wait for the price to run. Okay, I think it is out of the timing. Yep, it is morning time. Let's wait. And here you go. Target smashed. So we made right now $2. Let me drag this there. Let's see some more example, guys, so you will get the complete clarity. Let me find some examples and save you the time. Alright guys, so we have another example. Fair value gap in the 4-hour time frame. Criteria number 1 met. Now drop to the 15-minute time frame and wait for the price to come to our fair value gap. Alright, boom, price retracing into our fair value gap. Alright, now you do not need any kind of structure shift, market structure shift, all of that complex thing. You just only need a fair value gap in the 15-minute once again. Let's wait. Nothing. So in this case, now we have fair value gap here. Alright, let's set the entry into fair value gap. Target 1:2, and let me change the color of the 15-minute fair value gap so you do not get confused. Okay, now wait for the price to okay, so price tapped. Just wait. And here we go, guys. So we made once again 2R. So far we made 4R. Guys, the strategy is pretty simple. Whenever you are winning, you will make 2R. Whenever you are losing, you will lose -1. Even with the 50% win rate, you can literally print the money. This is all you need. But some of you think that if things are so simple, how the fuck they can work. This is general human nature, but believe me, it is the reality. Now let me show you some more examples so you will get the more clarity. And yes, do not be lazy, backtest this. Once you watch the video completely and understood, backtest the strategy, collect the data, and you will literally get surprised how amazing this is. Now let me show you some more examples. So here we have our 4-hour time frame. Just mark the fair value gap. So in this case we have one fair value gap and another one. When you have two fair value gap, always use the recent one. Alright, now wait for the price. Now for our tapped into our fair value gap, drop down to the 15-minute, and simply you can see, guys, I told you, if your fair value gap sometimes get disrespected, but that does not mean it get invalidated. It is still valid because price is just liquidating the early buyers. Alright, then we have again fair value gap in the 15-minute. Let me change the color. Let's set the limit entry. As I told you, you do not need to place your stops above all of the swing low. That is nonsense. Simply blow the candle because this is already high probability. Wait for the price, and in this case we got stopped out. This is because outside the time it's 3 p.m. and then let's see the trade worked or not. And then trade worked. So sometimes it happened, guys, during the outside window, but no worries. Let me show you some more example. So here is the example. We have our fair value gap in the 4-hour chart. Price tapped into our 4-hour fair value gap, then simply drop down to the 15-minute and then wait for the fair value gap. Nothing. Okay, so now we have fair value gap in the 15-minute chart. Simply set the limit, baby. Set it, stop there. Target 1:2. Let's run the price tapped perfectly, and just run the price. Let's see what happened here, and boom, TP smashed. So far we made 6R. So far we took 4 trade, 3 win 1 loss, and we made 6R in 3 wins and -1. So total we made 5R, guys. Now imagine how smoothly you can pass the funded account with this simple model. Alright, so let me summarize the strategy. The strategy is pretty simple. You do not need any kind of liquidity market structure knowledge. All you need is step number 1, click on 4-hour time frame. Step number 2, find the fair value gap on the 4-hour chart. Step number 3, wait for the price to retrace into your 4-hour fair value gap. Step number 4, drop down to the 15-minute time frame and wait for fair value gap on the 15-minute chart. Step number 5, set your limit entry. Step number 6, set your target, and boom. Step number 7, let your trade run, let your edge run. Do not mess with it. Do not drag to break evens or changing RR. Be disciplined and let your system run. So if you like the video and new to my channel, make sure to subscribe, guys, because it gives me motivation to make more videos. And also you can suggest me next topic which you want, so I will make the next video on that topic. So thank you for the watching, guys.